Do you see a difference in my appearance? I think everybody who has been following up on this channel or on any other media would notice a difference. If you see that difference, just put that in the comments. I would want to know what difference you saw. Hello and welcome back to the channel. Today we are going to be looking at patterns. You see, we human beings recognize patterns all the times, even if we don't really notice that we recognized these patterns. It is just human nature. That's just how we are. And even dogs also recognize patterns. Now, when looking at price action, people seem to forget that everything you see in the charts are done by humans. And if humans repeat things all the times, then there should be some patterns in those charts. Even if you are not a patterns trader or investor, you will recognize some patterns in the charts and you will see that these are repeating all the times. So today we are going to look at a specific type of pattern which I think is what we are trading in as we speak. Now, the type of pattern we will be looking at today will be the descending or ascending broadening wedge. Now, I like explaining all of these one after the other because I mentioned them a lot. So I don't want to be mentioning them and people don't understand what the hell I'm talking about. The entire purpose of the channel is to let people understand crypto, and it's literally my full-time job to bring crypto to the understanding of basically everybody. Yes, so if we take a trend line from here, let's say we are looking at a descending broadening wedge. So this one right here is our resistance, and this one right here is our support, usually like so. So it's basically a wedge that is that's falling. So it's going to the downside like so, and it broadens as it descends. So you will find that price is doing something like so. Yeah, okay. And the exact opposite of this type of structure is the ascending broadening wedge. So you would find price doing something like so. So that's the ascending broadening wedge. You will find price doing something that looks like so. Now, the bias behind these two types of patterns is this one is a bullish structure. This one is a bearish structure. So let's call this one A and this one is B. Yeah? All right. So A is a bullish type of structure and B is a bearish type of structure. Now, by being bullish means this will eventually go up and this will eventually go down. Now, it's important to understand that this is playing with our psychology here, because this is being bullish while price is going to the downside, and this is being bearish while price is going to the upside. So whilst every other person is happy that price is going up, you as a patterns understanding person will say, no, this is actually bearish. And whilst price is going to the downside right here, and everybody's freaking out, everybody's like, oh, it's going to hell, it's going to hell, you as someone who understands patterns will be like, no, that is actually bullish. And it is counterintuitive because, well, it's not, it's clearly going to the downside. So people normally should have the right to be afraid that, well, it's crashing. But you, in the other hand, understand that by it crashing like this, it is instead bullish. And right here, you understand that by it going to the upside, it is instead bearish. And the further down it goes, the more bullish it becomes. The further up it goes, the more bearish it becomes. Now, I like to take the time and explain all of this because, well, there is this narrative on media that patterns are for retail traders. But the thing is, and I continuously repeat this, there is no best method There is no holy grail. There is no strategy that you would say, oh, only this works. No. All strategies do work. Some only work better than others in particular conditions, particular market conditions. Some even work better than others at particular time frames. Like patterns won't be good at the 1 minute time frame, but they will be very good on the daily or even weekly time frame. So let us continue with this. If you have something like a wave, like a normal wave in physics, so you'd have something that looks like so. This right here is the crest of the wave. This right here is the trough of the wave. So the crests and troughs of patterns are the targets of that pattern. So right here, let's explain what's going on. Is Bitcoin at 26K? Is Oh God. Oh wow. So the target of this pattern depends on the troughs and crests of the structure. So this right here to here is a target. This right here to here is another target. Right here to here is another target, and from right here to here is another target. It is very easy that the pattern reverses when it meets the first target. That is where the idea of retail strategy comes from, because retail would think it must immediately go for the ultimate target, because from this one right here, this is the ultimate target. This is the first target, second target, third, fourth, and this is the ultimate. So most people will expect that it goes for the ultimate, but what you would expect is that it goes for the first target. After that first target, there is a very high tendency for it to reverse and go back to the up or downside depending on the type of pattern. So let's start with this one. We are going to take the one that we have on the charts, that we have right here on the chart, so that we can make an example of it. We have an ascending broadening wedge, and we will explain why this is so important to understand. So we have price coming from this level right here. It goes up, hits the resistance, and comes back to the support right here. Goes back up to the resistance and comes back down to the support. Now sometimes it may not really hit that exact support, or it may just go like this and come back and go again like this. So you should be mindful of this. You have to understand all of these are probabilities, so it does not have to hit the exact resistance. But when you want to calculate your target, you calculate based on candle closes. All right, so we have it and it comes back like so. To demonstrate, we can go to this one right here. It's good that we just do them while we draw them here on the charts. So we have this right here. We have this right here. And we have this right here. Now, how do you even draw them? That could be your question. To draw the patterns, you start from the first candle close right here. So the first candle close is to identify the structure before the pattern itself. The structure that we see here is a descending triangle. Now, for descending triangles, you'd expect a move that looks like so. You'd expect a move to the downside right here. So that is your descending triangle, and that's its target that has gone to the downside. So from this structure, you have to start your next pattern. And the pattern that we see before us, ladies and gentlemen, is an ascending broadening wedge, similar to this one. But in this ascending broadening wedge, we have 3 points of control from here, here, and here. in the upside, we have from here, here, and here. So we have 3 touches of the support and resistance, support and resistance. So what's the essence of this pattern? It's a bearish one. It tells us that price is going to reverse to the downside. But of course, with your ascending or descending broadening wedges, you want some confirmation for that thesis. You want something that tells you that, but really this thing could end up going back to the downside. So where is that thing? Now, if we just look right here, we will see something that we would all know, everybody in this channel should know. We see a double top, and we see, let's change the color so that you'd understand it better. And we see a head and shoulders pattern right here. So as I was even discussing, as I was saying in the previous video, when you see a head and shoulders, expect a retracement of the second shoulder. This right here is the second shoulder. So the first shoulder, the head, and the second shoulder. Note that everybody in the market is seeing the same structure. So they will be shorting here, or say selling here, expecting that price goes to the downside. But price will not go to the downside. Why? Because they would have put their stop losses up here. You can see the retracement of the second shoulder right here. I hope it is clear. You can see the retracement of the second shoulder by this structure right here. I was talking about 20K right from up here, around here. So this structure right here is telling you that there will be a retracement of the second shoulder. This is that retracement. This structure right here is that retracement. After that retracement, you should expect a move to the downside by virtue of the head. So the way ascending broadening wedges usually would work is when you see these 3 touches like this, the first touch on the support, the second one, and the third one, you expect a bounce. But that bounce should fail to go above the previous high. The previous high here being the 69K top. It should fail. Usually it will fail around the 0.618 Fibonacci retracement or the 0.5 Fibonacci retracement. How do we get those Fib retracements? We take from this candle close down here, that's the lowest close down here on the weekly time frame, and we pull that up to the highest close up here. Yes, we pull that up to the highest close up here, right at 64,000. Then we will see the 0.618 Fibonacci. So this right here is the 0.618 Fib. Now the 0.618 Fibonacci is where we would expect that price bounces off of before going for the target of the ascending wedge. Now I like explaining this on YouTube because it allows me to talk and not have to, shorten the video, like on TikTok, and people can actually understand why my thought process is that we will go up before plummeting. And when people do not understand this, they think the rally up means that price is not going to go to the downside. It confirms the downside plunge. Invalidating the downside target will mean that price goes up above the 0.236, which will be this one at $54,000. That will invalidate it going to 3,000. This is the reason why I was talking about buying down here, because you don't want to wait to see if it's going to come here and go back down. You don't want to do that. That's why I keep reminding that Bitcoin is a different type of asset class. It's not your usual, it's not the stock market. So that's why I say that for risk purposes, to avoid the risk of waiting that it goes up before coming back down, I am buying here. I dollar cost average here because this thing could go up here and continue. There is no 100% certainty. It is always a probability, but a probability geared towards a certain percentage of it happening. So my thinking is that this thing could go to $3,000, and I am 70% sure. Except it goes up here, the more it goes above this Fibonacci golden ratios, the more unsure I become of the $3,000 target. But I am not just waiting for it. I allocate some capital to buy at 3,000. Now this means if I had $10,000, I will be $5,000 in the market. And actually I am 53% in the markets with my entire portfolio. So this means that at $3,000, if you had $10,000, you allocate 3,000 at $3,000 or close to $3,000. This is giving you, the edge. If this thing goes to 3,000, you will at least have the chance to own one Bitcoin. There is a very huge importance of looking at it this way, because we think BTC will one day be worth $100 million. Now that does not mean that BTC will be more or anything. It simply means that the dollar's value will be so less that it will take $100 million to account for one Bitcoin. All right. So the thought process behind ascending or descending wedges is that at the third bounce, you would expect price to actually move to the upside. That's why I made a post the other day on the Discord and Telegram group that 69 divided by 2 is our answer. So it usually would retrace 50% of the top. So from this top right here, to this level right here, it's going to be retracing 50% of that move. Now, again, this all is a probability. It's not a must. It could go up to 28 and crash. All right, but that is what you would normally expect from these types of patterns. You'd expect a retracement to the upside and fail to go above the previous high. The previous high here being the 69K top. When it fails to go above there, it will create you the triple top. That triple top, or even that could just as well be another ginormous head and shoulders pattern. So the head and shoulders pattern in this case would look like so. This would be the first shoulder, this will be the head, and you would have the second shoulder forming, you would have the second shoulder forming somewhere around here. So you'd have it look somewhat like so. This would be targeting 3,000. Now, it does not necessarily mean that if this thing goes up here, I'll just, liquidate all my assets. No. This is just to let us understand how price is going. We don't want to invest in an asset that you don't understand. You want to understand how the price works before you even put your money in it. And by virtue of this analysis, you understand that if it did come up here and you were 100% in the market, you know that this is an ideal zone to even cash out some profits. So that if this thing goes down to 3,000, you have something to buy. It is not bad to be in the red. If you buy right here, I was talking, I think that was yesterday or day before yesterday that I made the video. I was saying that if you bought at 25K, do not sell. Do not sell, because people who bought here, right at the top here, must have panicked. Must have been thinking that, oh, I bought the top, and as it dropped, they sold. When it came back up here, so it dropped here, they sold. It continued to drop and they were like, oh, I'm winning, I think it's going to drop more, yeah? And it came back up here, they're like, oh, maybe it's going back up, and you buy, it drops again, and you sell. So you keep doing that and you are missing out on the entire rally. You just buy, we are in a bear market, and wait. When you wait, good things come to those who wait. This is just a fact of nature. If you wait, you will be rewarded. You will, not you might. You will be rewarded if you wait. So this strategy here lets us understand that this thing, if it comes up here to these three golden ratios right here, especially the 0.618, anywhere between 33,000, I think it could be going to 31,000. That's the maximum that I can see. But if I am targeting the inverted head and shoulders right here, let's take these out and target the inverted head and shoulders, which is something I was thinking about yesterday, and I saw that there is a possibility that it goes above the 31k mark. All right, now, and that's why I always say that charts do update. It's not like it's going here and it will only go here. No, this candle alone has confirmed something else. This candle here is confirming the inverted head and shoulders. This is the strategy that we were talking about the other day. We were talking about having a shoulder, and we even talked about it in this video, having the head and having the next shoulder, having people who bought here leaving their stop losses down here. There will be a retracement and a move up. That move up will be going for the target of the head. What is the target of the head? Let's just find out in this video right now. It's not like I'm the one saying it. Let's just put it right there. $36,000. Where will $36,000 be? If we take from our Fibonacci that we have talked about, the lowest close right here to the highest peak right here, peak close right here, that is between the 0.618 to the 0.5 golden ratio. That is inside of here. Some people will call this the golden pocket. There is a very strong chance that this thing bounces off of here and plunges to the downside. Where would it be going to if it came up here? Now, if it came up here, its first target, if it came up here, would be like so. So it came up here and it plummeted. Now let's just measure that. I don't know, so let's just do that in this video and you see it for yourselves. Let's take this like so that you can see. All right, so we are taking the ray right here, and we take from this lowest point right here to that close. We are targeting the closes. You'd be like, why am I targeting the closes? If you come here to line, yeah, you will see that the line type of chart only uses the candle closes. That's why I am using only candle closes. So you see it bouncing off of my line right there. So if you are targeting with the line chart, you have very accurate predictions. So if we come back here to the candles, the reason why I use this red and green candles is because, well, the channel is understanding crypto, so it's good to use things that everybody will understand. I would rather use white and black, actually, like Hamamuna Isa himself, but I want to use things that people are familiar with. You know, it's all about understanding crypto, so I don't want to complicate anything. That's why I actually oversimplify some stuffs at times. So if this thing came up here to the $36,000 mark, where we would expect that it goes down to would be from the $36,000 mark down to this line right here. That line would be at $18,000. Now this depends, because if this thing came up here and started to consolidate like so, you'd understand that the more it consolidates, the higher its breakage point would be. So right here will not be 18,000, that will be 22,000. And if it consolidated up to here, it will not be 22,000, it will be 26,000. So breaking 26,000 or closing a weekly candle below this 26,000, if it consolidated right from this mark right here up to this level right here, closing a weekly candle below the $26,000 mark would be the 3K target, because that is where it bounced off of before even going back for this run to the upside. This would be the fake run to the upside, at least for now. If it goes higher than the 0.236, 3K will not happen. I don't want to say never, because well, it could still just come down. But according to the charts, if it went higher than the 0.236 right here and closed a weekly candle up here, we always use the closes, not just go, yeah, because it could just as well just go up to 100. Doesn't mean that it's going to stay there. It's about closing candles. When it closes, then it will be recorded in this line chart, yeah. So if it went up here and closed a weekly candle, then we know that this is not going to go to 3K. Either way, we are in the markets. All right, we are in the markets. If it crashes down to 3K, you still have capital to buy. If it went up here and let's say you went all in when it was at 16K or whatever, at least have some fiat, take some fiat off the table, because it will be hurtful if this thing went to 3K and you had nothing to buy and you couldn't even buy with say $1,000. Because if you bought Bitcoin at $3,000, buying just $1,500 worth of Bitcoin will give you 0.5 BTC. The 0.5 BTC means that if BTC ever went to say $500,000, you are making $250,000. If it went to $2 million, you are making $1 million from a $1,000 500 investment. Now, this all sounds fun, but it will not be pretty if this thing ever went to 3,000. The biggest advantage of doing these types of forecasts is so that you have an idea of what can happen. Because trust me, if this thing is going to 3,000, everybody on the internet will tell you that this thing is going to maybe 0. Now, you can even notice something interesting in this chart. When you pull the Fibonacci from this level right here to the close up here, what do you see? You see the 1 fib, and I talked about this 1 fib. It means the 100% retracement, 100% retracement of the entire move. What move? This move. This move. So this would be 100% retracement, and that's even taking us to 2,700. So you could still see wicks coming down here. So when we talk about Bitcoin to 3K, it does not really mean that it cannot go below or it must hit 3K. No, we're just saying that this thing is telling us that it will come here. At least for now, that is the information that we have. This information can change. If it goes up here at 50K and closes a weekly candle there, we can't keep talking about 3K. So the information changes as the charts change, but for now it has not changed. Should you sit and wait for it? No. I would invest. Of course, this is not financial advice. All of this is just entertainment. So if you're eating some popcorns while you watch this, good for you. It's just entertainment. If you choose to use this for your own maybe investing or whatever, really that's on you. Sorry to say, but it's just entertainment. I'm not a financial advisor. If you need one, I think I know a few. So that is the move that we would be expecting from an ascending broadening wedge. You'd expect a resistant line, you'd expect a support line, you'd expect a bounce off of the support to the resistance, come back to the support, go back to the resistance. On the third touch of the support, you expect a bounce. Now, it could still just come like so before going back so. But if it went back to the upside, you want it to go half of this right here. You want it to go about half and come back like so. If it does that, you know that it's telling you that I am going for this. All right? All of this is to get you mentally prepared, because if this thing goes to 3,000, a lot of people will be too scared. If it even went to 10,000, people will be crying their eyes out. Just the other day, this thing was at 19,000. We were talking about it going to 18, and clearly it did not. This is one of the things that I said. If you plan to buy before the target. If you think it's going to go to 18,000, do not want it to go only to 18 before you are buying at 18. Buy at 19 or 20. Buy at 20 even. Spare the $2,000 difference and buy at 20. 20 is the even number, so you want to buy there instead. If you think it's going to go to 7, start to buy heavily at 10 or 11, because breaking 10 will push this thing below. So it's all about dollar cost averaging towards your target and dollar cost averaging out towards your exit target. But it's important to know that target, because if you do not know, if you wake up tomorrow and see your account and it's like minus 60%, trust me, you will not be happy. So that's pretty much it. When you see this type of structure to the ascending side, you know that you want a failure here. That's what you want. You want a failure and then a move back to the downside for the target of this. It's the same thing if the thing was reversed. If you see it going to the downside, it's telling you that I will go up. That's what it's telling you. I will go up. If it's going to the upside, it's telling you I will go down. And so these are the things that actually fool people. When price starts to go up, I gain a lot of followers. When it starts to go down, I lose a lot of followers. And that's just how it works. My content is directly related to Bitcoin price. If Bitcoin is crashing, I know I'm just going to see 2, 3, 4 views per video. And that's just on the unfortunate truth. People get interested when it's going up. I got interested in crypto when it went up. Yeah. So, but that's just the thing, and we all learn from this. We all learn with time. So it's a learning process for all of us. But it's just important that you understand that an ascending broadening wedge is not a bullish structure. It's a bearish structure that will try to fool a lot of people by this mini bounce right here. Now, by bounce, I mean that when it comes up to the 0.618 Fibonacci retracement right here, we watch it closely. We watch its reaction at that Fibonacci. If it gives you something there that looks like a gravestone doji, you know that this thing is going to crash. Let's look at the gravestone doji here. And the gravestone doji here is actually part of a bearish pin bar pattern. This bearish pin bar pattern right here is not bullish at all. When you see this huge bullish candle and this red candle with the long wick to the upside, that's telling you that there is serious problems coming in ahead. So these are the things that you watch when price goes to your target. When it goes there and you see anything like this, this will happen. So it's just something that we should keep in mind. I hope you did enjoy and understand something from this video. This video was meant to let you understand how these types of structures work. I'd like to know what you thought was different from the beginning of the video down in the comments. And if you're thinking of buying or selling Bitcoin or any other cryptocurrencies, use my affiliate links in the description to open an account on exchanges. They are affiliate links, so I do make some commission when you use the links, and you also get discounts in trading fees, so they help you and me. Also, do not forget to like and subscribe to the channel if you are new. I will see you in the next video. Until then, stay safe.